All right, well, thank you everyone for coming and attending this Native Market Success Part 2 Building Blocks of Business, made possible in part by the Office of Tribal Relations. So we're very thankful for their assistance in developing out this programming. It will also be available on our Mighty Networks platform once it has been recorded and posted. So it will be available on demand for your viewing needs here and then also on our Mighty Network. So be sure and be on the lookout for that. And you can always recommend it to your friends or coworkers or anything like that. So Padgley and I are going to present on this, and Padgley's going to take it away.
Yeah, hello everyone. Welcome to Building Blocks of Business. Let me see back into the next slide. All right, so we kind of preface this with having an idea or a product already in mind and already assuming that personal savings and ag loans being the key sources of funding for food and agricultural businesses. So the building blocks of business have to do with building out your business plan, so that you can go after loans and grants opportunities as they arise, because you want to show that you have clear vision, you have goals in mind, objectives, short and long-term goals that you want to meet. And all of that being put into paper and a plan shows that you are worth investing in and that you have a great product or idea in mind. And also building out your business plan can help you plan for contingencies and manage any risks involved in your business, and having that laid out on paper. So we believe that the building blocks of business are your business plan. And we'll just get into the different components of it. So we'll kind of walk through what each section needs to include, and then we'll kind of tell you a little bit about some of the technical assistance provided by IAC that can help you put together your plan, and a resource called Ag Plan that will be really beneficial in kind of building this out and giving you really good concrete examples along the way. But yeah, that being said, the parts of a business plan are the executive summary, the business description, product and services, marketing analysis, strategy and implementation, organizational management, and most importantly, the financial plan. And we'll kind of get into what each one of those entails right now. So for the executive summary, it'll start, it'll be the first thing that any reviewer will read about your business. So you need to just put the need to know information. And a lot of the times you really don't know the need to know information until you're all complete. And that's why we recommend that this section get done after completing all the other sections of a business plan. So what needs to get included here is name and location of your business, your intended product and service, the mission statement that you come up with as you work through your plan, and also the intention of this plan that you're putting together. So you might put together a plan, and revise it and edit it over time to serve different purposes. One of them being like capital requests. So if you are wanting to after a certain amount of dollars for to start or maintain or operate or grow or purchase a piece of equipment, that needs to be stated in whatever you're sending out the door in a proposal type format. And again, this one should be completed at the very end. So for your business description, this is the section that'll address, again, the need to know information for your business, but more comprehensive in nature. So a lot of that business history, if there's any, you'll want to introduce whatever product or service you're providing and give a little bit of information about the like trends that it's seen over time, like supply and demand trends. Be pretty brief in nature about this. And not get too overloaded in this section as well, since we want to have that need to know information there. You'll include business structures and maybe why you chose those business structures. And then you'll want to list out your short and long-term goals for the business, with like any objectives that you had for meeting those. And we recommend like 1 to 3 years and 5 years and maybe even 10-year range for goals listed in this plan. And again, it's depending on what your proposal or your business plan intentions are for. So if you're going after money, if you're going after land, you'll want to kind of tie in those goals to those capital requests that you're going to come up with. And we just kind of included an example at the very bottom. So by year 1, I want to sell 1,000 units of a product at such and such farmer's market. And then when you get into the product and service side of things, this is where you really want to be detailed about your product. You can be visual in nature. You can talk about, just be really detail oriented, talk about the cost and the pricing of your product. And then you'll also want to state what makes your product or service stand out in the marketplace. So what kind of benefits a consumer might see from your product, something that you can include here. If there's any sort of like health benefits, do some research and make sure to include like empirical cited research in this section as well. And then this is also the place to include any like trademarks, patents, or certifications that you seek for your product or service. But yeah, here it's time to showcase what you want to sell. Make it enticing in any way you can. I would include like visuals if you have the product already kind of mocked up, things like that would be really beneficial to include here. As far as your marketing analysis goes, this one, I like to think of this as your three Ps and, first identifying your target market and then building out your three Ps based on your target market. So that could include things like demographic information around like age, gender, location, whoever your target market is. It can be a variety of folks, it can be a variety of ages, um, different locations, but you should be able to tie that into why your pricing looks the way it does and how it's going to meet your consumers where they're at. So price can be a strategic decision, and there's different resources available on like how you want to round off pricing at 99 or 49 cents. Things like that are very important, so that should be included in your marketing analysis. Place where you want to sell your product is very important. Whether it be in an online shop or Facebook, roadside stands, farmers markets. That's where you'll include that information. And then also think about the financial impacts of a lot of the marketing activities that you'll want to go after. So anything like mileage, the photography to all the markets, your promotional items, all of those translate into a dollar amount that you'll want to focus on any sort of like projections that you come up with in your financial plan and estimates. As far as strategy and implementation, I always like to think of this as the best place to put a SWOT analysis. If you've never heard of a SWOT analysis, it stands for strengths, weaknesses, opportunities, and threats. And as I've listed out here, your strengths and your weaknesses are internal to your business, and then your opportunities and threats are external. And it's a really good place to kind of write down, you know, at least 3 to 4 different components to those strengths, weaknesses in the matrix. You'll usually do it in like a grid system. So you'll have them all kind of separated, and it's good to have at least 3 there so that you can think about things like competition, if there is any, climate change, any supply chain issues that come up, and then any sort of like the internal strengths you have as a business owner or your educational background or your location. Um, Things like that are all, things to consider, and they really help you get a comprehensive overview um, of how your, plan will be implemented on the ground and any sort of strategies to help mitigate any risks involved. So talk about how you'll operate here, some logistics that you have in place already, and some things that you want to get started in the future. Really detail how you want to get that product out of the door as a part of this section as well. And think about any sort of like produce safety training. I know in the past we've included like a food safety plan in someone's business plan, because it kind of helped them like visualize the work site and everything like that. Um, and then you'll want to kind of identify the amount of employees that you seek to have now and in the future. And that will really help you get to the next component, which is just organizational management. This one can be pretty simple. If you're just a sole owner, I would really emphasize your background, qualifications, accomplishments in this section, but also just come up with like a basic organizational chart if there's different like paths to follow. If you are a nonprofit, you're starting a nonprofit and you have a board of directors that you've recruited, include their qualifications, things like that into your organizational plan. And then finally, we talk about the financial plan. So depending on the nature of your plan and what you put it together for, you want to make it make sense. So I'll credit Lara for that really, really good little pun there. But you want to describe your business and how it will succeed financially. So you'll want to describe your current financial position, what it's looked like for the past year, if you have money coming in or you don't, how much you've spent on things. You'll want to have your historical financial figures in place if there are any. Specifically, if you're going to lenders, they're going to want to see financial statements. One of them being the income statement, which will show your revenue and expenses over a given time. And then your statement of cash flow, which is how your business basically breathes in and out cash over a period of time. And then you're going to want to show them a balance sheet, which would show your like assets that you have, any long-term and short-term liabilities, and any equity at any given time. Those are very important financial statements. And I'll kind of emphasize in the next slide about TA providers and working with folks that can help you along and kind of navigate those different financial statements. At IEC, we have our program, mine specifically, works in that. So yeah, those are some financial statements to include in your financial plan and really hone in on getting like estimates and things like that for financial projections, because that's something that folks will want to see as well. So I mentioned having some resources in place. So one of the resources we want to highlight in building out a business plan, that helps not only for us as technical assistance providers, but for you as a producer or an operator putting together your plan, is using this really cool free tool called Ag Plan. And it's put together by the Center for Farm Financial Management, and it's completely online. And I have like a little screenshot here on the different types of plans you can put together on the website. So they have like value added, regular commodities, personal plans, small business plans, all different sorts of like templates already pre-made. And there'll be like another example on the next slide that'll show like that it has resources on there, examples, samples, different descriptions for each component of the business plan. But one thing I wanted to highlight is that there are other options too. So they included a commercial fishing option called Fish Biz Plan as well. So it's a really great tool. We really like to use it as TA providers because we can end up logging in as a reviewer if you choose to have someone review it and look over it and help you refine it. You can have that option and share, that that information as you work on your plan. But this is what it looks like. This is the sample page for the business history, and you can see right here that there's tips, there's resources, samples, comments, and you can really they're really comprehensive in some of the samples that they've included and the different types of operations that are included in the samples. And off to the left side, you can see all the different components that we just went through are already included in Ag Plan. And you basically just go to each one and there's drop downs and you work through each part of the plan. And don't get overwhelmed. You don't have to do every single component to the plan. So always be mindful of that. It may be listed, but you may not need to do every little part of it. And again, working with a great TA provider can help you navigate that whole situation. But as far as like the financing options that you have as a food and ag operator, there's loans and there's grants and fundraising for your business. So USDA Farm Service Agency offers loans. They offer small micro loans of up to $50,000. They offer operating and ownership loans as well. There's different CDFIs that operate across Indian country that provide financial technical assistance, and some of the CDFIs usually offer lower interest rates and have more flexible terms compared to things like a commercial bank, which is also an option if you have, really good credit, things like that for your business. Commercial banks, the farm credit system is also an option. But in terms of like grants and fundraising, there's different nonprofits that put out like re-granting opportunities every now and then. There's grants you can go after through USDA Rural Development, such as the Value Added Producer Grant. If you're getting into value added production, they offer a planning grant, which I forgot the dollar amount it goes up to, but you can get money to build out a business plan. And then you can also get on their implementation side and get a certain amount of dollars. It's higher than the planning side, but the implementation side to build out your value added production there. There's also that opportunity. And then always, take advantage of networking opportunities and have your business plan ready. It's been used in the past at IAC annual conference. Producer will come to me with their business plan. It's just a really good opportunity to have that on hand and ready, so that you never know who you're going to meet. But other than that, we're all wrap it up here, but I just wanted to emphasize using IAC TA providers, whether it be your regional technical assistance specialist or someone from Lara's American Indian Foods program or the Regenerative Economies program to help you navigate a lot of these like different opportunities and provide application support along the way. But yeah, that wraps it up. And Lara, just let me know next slide since I'm in controls over here.
Okay, perfect. Well, thank you, Padgley. And we'll kind of segue Padgley's discussion into talking about the different types of business structures. So we have listed here, these are kind of the basic different types of business structures. Important to note that none of this is legal advice, nor is it accounting advice. So for actual accounting and legal advice, see a CPA or a lawyer, but this can be kind of a good place to start. Next slide. So sole proprietorship, you're going to have complete control, but you also have complete liability. It works well for low-risk businesses or simple startups, but the business is not a separate legal entity, so taxes can be easier. However, it can be a little bit more complicated if the business isn't doing well or if the business goes bankrupt, because how that's going to impact your credit score because you're not legally separated from the business. So again, it works well for low-risk businesses or for simple startups, but you might want to think about the other ramifications to your kind of legal portfolio as an individual, not as a business, and how that's going to impact it. Next slide. So there's two types of partnerships. You have general and limited partnerships. And in general partnership, everyone has an equal role in owning and operating, and it can be referred to as a limited liability partnership. So in this general partnership, say there's 3 partners and they have, 33.33 repeating percent responsibility in owning and operating, whereas a limited, there is limited in general partners. A general partner is similar to the ones discussed above, whereas a limited partner are going to be more so investors who have little say or little liability, but they're going to provide financial backing. So maybe a limited partner, they don't know a lot about the industry, or they don't know a lot about operations, but they do think that it's a good investment opportunity, and so they're going to come in with money to help you get to the next level, but they might not have a lot of say in the day-to-day operations. Next slide. In a partnership, the business does not pay tax on its income. Profits and losses filed through partners, personal income tax returns. There's few forms to fill out, and there's combined finances and knowledge for business development. A team is always better than an individual, and so that can be a benefit of a partnership, is you're going to have the knowledge and expertise of several people to rely on. However, the downside of that is also all of the decisions have to filter through all of your partners as well. So there's kind of two sides to that coin. Next slide. A corporation is an entity independent of its owners. There's additional regulations, record keeping, and tax requirements. There's different structures such as a B Corp and a C Corp. They can be open or closed. The owners are not responsible for the corporation's finances, and there's certain tax exemptions. When it says the owners aren't responsible for the corporation's finances, it essentially means that you're legally separating yourselves from your business by allowing it to be a corporation. Next slide. An S Corp must meet specific IRA criteria, and it has 2 main limitations. You have to have 100 or less shareholders, and all of your shareholders must be US citizens. There's no double taxation, there's liability protection for shareholders, and you can use the cash method of accounting. Whereas for some other types of corporations and businesses, you have to use an accrual method of accounting. So all things to take into consideration if you don't plan on having a lot of shareholders, or if you feel like this would be beneficial for you. Next slide. A limited liability corporation is a hybrid business structure pulling from corporation and partnerships. It works well to protect your personal assets and pay a lower tax rate than a corporation. If a company has financial losses, owners' personal assets are protected. There's pass-through taxation. unlimited number of shareholders, a more flexible management than a corporation, and an LLC can decide how to divide its profits among its shareholders. LLCs can be really beneficial, especially for smaller businesses. My parents have an LLC because it allows them to separate their personal assets from the company's financial endeavors. Along with the pass-through taxation, it can just be a really good option for people who are looking to protect themselves, but also want to start their business. And, there's an inherent risk involved in doing business. Next slide. Taxes vary based on where you are located and your business structure. A good CPA is really important, and it's always wise to ask around in your area for recommendations, and also ask people who do the same thing that you do. Having a CPA who understands your business model and structure and understands agriculture, understands the specific type of agriculture that you're working in, that can be really beneficial. In ag, we tend to be really asset heavy and cash poor. And so having a CPA who's going to understand those things can be beneficial. Next slide. So a lot of the times we'll hear the words OSHA and we'll find ourselves asking, does OSHA even matter to me? Fewer than 10 employees or establishments who are classified as low hazard industries are exempt from OSHA record keeping requirements. All industries in agriculture, construction, manufacturing, transportation, utilities, and wholesale trade must keep injury and illness record. In the Occupational Safety and Health Act, Congress made no special provisions for Indian tribes, supported by rulings in the Court of Appeals. So essentially, it just means if you have more than 10 employees and you're working in agriculture, construction, manufacturing, wholesale trade, utilities, transportation, then you're going to need to keep OSHA requirements. And so those are just some important things to keep in mind as you're thinking about your business growing and hiring new employees and what that's going to look like. Next slide. If I'm selling direct to consumers, should you take EBT or SNAP? In order to take EBT or SNAP, you have to sell staple foods in 4 main categories: grains and bread, fruits and vegetables, dairy, meat, poultry, and fish, and have 50 or have more than 50% of gross retail sales coming from one or more staple foods. EBT card is the only way to take SNAP benefits in all 50 states, and it must be approved by the USDA Food and Nutrition Service. Hot foods cannot be purchased with food stamps. Some people have found workarounds to this, and so you'll purchase cold food with your EBT card, and then they cook it in the back. So if you really want to, there's always ways to kind of work around that, but taking EBT and SNAP can be great, especially if you're working in low-income areas or in a food desert where there's people who are going to be utilizing EBT and SNAP benefits and they want to buy from a local person, but they can't do that because that local person doesn't take EBT cards. It can be a great resource to the community and allowing them to purchase local foods with their EBT benefits. Next slide. The Uniform Commercial Code is a comprehensive set of laws governing all commercial transactions in the United States. It's not a federal law, but it's a uniformly adopted state law. It's a good thing to read and a good thing to know whenever you're doing business, just because it is a uniformly adopted state law. So it's a good thing to keep in mind and to stay up to date on. Next slide. A lot of the time, whenever you think of packaging, you think single use or bulk. So there's different packaging requirements for each. Each package must have weight, ingredients, product, name, and where it was packaged. And so sometimes you'll see on we'll say Little Debbie snack cake, it'll say not for individual retail sale. And that's because it doesn't have the packaging requirements were met on the big package, not on the individual retail sale ones. Whereas if you buy a beef jerky stick at the grocery store, it has weight, ingredients, product name, and where it was packaged on the stick. And so again, that's one of those things. And how are you going to be selling it? Where are you going to be selling it to? How is it going to be utilized? And how are the regulations different for each of those things? The Code of Federal Regulations is a really important thing to be very familiar with as a food business. Section 21 is for FDA products and Section 9 is for USDA products. It's a good idea to be very well informed with both of those, especially the ones that pertain to you. The good thing about food regulations is it can all be found in the Code of Federal Regulations. You just have to be willing to read through it and really just dredge through some very boring federal language. Next slide. When we talk about UPC codes, which is a universal product code, the question comes is, do I even need one, right? And you might think, no, I don't right now. But it's also important to think about your business in the future and how they might be beneficial in the future. Some buyers are going to require a UPC code to retail product. And again, it might not be necessary in the beginning, but sometimes it's easier to build out these processes in the beginning than when you have your whole staff trained and you're ready to rock and roll. And then you realize that you have to kind of turn everything on its end because you don't have a UPC code and you have to figure that out now. A UPC code is a barcode that can be scanned at any point in commerce. Barcodes are really interesting, I think, because you can have variable weight or variable price barcodes, and we'll talk about that more in a second. Next slide. If you're using a point of sale system, you can program your internal or external barcode to automatically calculate the price and take inventory. Some UPC codes are variable unit or variable weight, and they can be customized to fit your operation. And so, as it says here, these little numbers beneath the UPC code, and you can, whenever you're configuring your UPC code, you can take those numbers off or you can leave them on. But basically, one set of numbers is going to be your SKU, like on this steak right here, that's $2. That's the price embedded barcode. So that you have your SKU and then you have your price and then you have some other information. But essentially, whenever you scan that into your point of sale system, then it's going to say what that item is and how much it costs automatically instead of you having to type all of that in. So that can be a real time saver. And there's a whole bunch of different ways you can configure UPC codes. I always think it's interesting to like go in the grocery store and look at the UPC codes, especially if they have numbers, and see if you can like decode what they mean. Especially once I knew like, oh, like all of these numbers mean something and the separation means something. I think it's fascinating. But next slide. As far as insurance goes, your business structure can provide some safety on the financial end, as we discussed earlier with our different types of business structures. But the federal government requires every business with employees to have workers' comp, unemployment, and disability insurance. Some other things to think about is you could have employees be 1099 employees or full-time versus part-time employees, and there's going to be ups and downs to all of those things. A 1099 employee is going to be they're technically going to be an independent contractor. And so, there's on the employee end, there's pros and cons to that as well. They have to pay all their own taxes, and just some other things to think about for the employee as well as for the business as far as reducing turnover and maintaining employees. And then there's also different benefits that you're required to provide full-time employees versus part-time employees. Next slide. Another important thing to think about in the food industry is HACCP, which is Hazard Analysis Critical Control Points. HACCP is voluntary with the exception of meat and poultry processing, juice processors, and seafood. HACCP may be required by some buyers, though. And so HACCP is essentially a check way to make sure that your food is safe and that you can say as it goes down the line to meet the consumer that, oh, we were free of issues here, we were free of issues here, we were free of issues here. So in theory, it should be a safe product for consumers. Next slide. A HACCP is a system which provides the framework for monitoring the total food system from harvesting to consumption to reduce the risk of foodborne illnesses. HACCP courses are typically taught by land-grant universities in your state and other entities. They can be a couple $100, and it's typically a 2-day training. If you're in a HACCP facility, then one person needs to be HACCP certified. And HACCP is going to include your standard operating procedures and your sanitation standard operating procedures. And then you need to have someone who's maintaining those HACCP records. Next slide. Here's some other IEC resources. The Native Market Success and the Meet to Market, as well as our YouTube channel and our Technical Assistance Network, can always be of benefit. Sweet. Well, this is our contact info. Please feel free to contact Padgley or I if you have any questions. And thank you so much for your time.